Hello, everyone. Happy Friday. Option expiration, triple witching. How's everyone doing? Just be careful today. Going to be a quicker live stream. There's a couple family things that are going on that I need to deal with. So didn't want to just cancel this one outright. But just be careful today, as you always know, on these quarterly OPEX. It can get very interesting, especially in the afternoon. So don't overdo it today. Good morning. That's at least my advice. Good morning, Zello. Good. Thank you for shouting out Sterling. He brings a tremendous amount to this channel, and thank you for the kind words. Good morning, Sterling. Again, Winnebago beat. That actually surprised me. But hey, it's why you don't trade what you think. You trade the chart patterns from last night. What do we got? ConAgra beat, miss, stock flat. Paychecks beat, miss, stock up. Good morning, Mark. How you doing? What the last day to watch? Maybe the last active day of the trading year. Well, thank you for tuning in. I really appreciate when you can tune in on a regular basis. I know you're busy with your work. Good morning, Patrick. Good morning. Good morning, Mark. Nike is down on poor guidance. It was a beat, but the guidance was bad and it's down substantially. FedEx also down. I forgot which one had the. Geez, I just blanked out. One of them had an amazing double top. Which one had the amazing double top? I have to double check. Uh, that is a true statement. When risk is excessive, the chart becomes distorted and every move feels personal. That's why you manage risk. Always manage risk first. Very good words of advice, Sterling. And nothing about trading is personal. When you're over leveraged, also, you can't analyze things correctly. Your emotions get in the way. And you notice one of the things I always do is make sure I analyze both the bull and the bear case. Doesn't mean, you know, I'm not trading in a specific direction, but I always keep the other one in mind. Should a pattern fail, I got to know what the other direction is. Good morning. That'll also keep you from getting blinded by a bias. Good morning, Jacob. That's a good morning, Heinrich. Yeah, see, the best day traders are aggressive and still manage your reward to risk and trade expectancy. All right. And there are times to, and especially with high probability setups, to be a little more aggressive, but always manage risk first. Good morning, Yogi. Good morning. Holy. Oh, well, that's good. In March, you'll be able to watch this full time. That'll be good. Yep. Position the size what blows up accounts. Markets change, but your exposure stays the same. I'm glad you're doing great, Mark. Good morning, Odie Green. All right. Just want to get that. It's always important. Good morning to Patrick and Rusty and other people. More people are watching over on Rumble. So thank you for tuning in there also. All right, going to be quicker this morning. I just wanted to make sure I thank everybody, especially on this holiday time. It's really nice to have everybody tune in. I know people have a lot going on. We have existing home sales, not going to be a biggie. Not going to be a biggie. Consumer sentiment, these are the final numbers for December. So pay attention to 10 a.m. OPEX is still going to overdrive today, but we could see again the 10 a.m. reversal potentially. So pay attention to that. So that's where we sit in terms of the Oracle getting bailed out by the Saudis. So that's going to give them a temporary reprieve. I'm going to still watch for the next rollover play, and that could be a gift for another rollover play. Chips are strong. Mega caps are mixed. But if you look at the groups, everything except consumer defensive is positive. Nothing majorly positive. Technology only up 52 basis points heading into the open. Fed watch has 80% still for the pause in January. When maybe the CPI numbers that come out next time won't be so screwed up. Boy, I tweeted out a couple things yesterday on it, or retweets, not my research, retweets from other people, just stuff to keep an eye out. Those were not high quality CPI numbers. Not because it was not nice, it dropped. It just the amount of the drop is very suspect due to the assumptions they made. Fear, back in fear mode, and Schiller PE close to 40 again. Thank you to Sterling again for putting in the earnings from both this morning and yesterday afternoon. So that wraps up this week in earnings. Good morning, Jake. Good morning, Jake. So, by the way, we got a couple people here. I got a couple emails. One of them coming from Jake. I did see your email. I will respond when I do have a chance. It might not be for a couple days. So, good morning, Royal Palms. All right, what am I looking for today? Remember, if we do have another big sell-off, 67.35 is a key closing level in the S&P. Just have to reiterate. Other than that, the levels are adjusted slightly, but not much. 68.20 is key support, or if we break down, becomes key resistance. So that's the level I'm watching going in the open to the downside. To the upside, we have some minor right here to 68.50 area, 68.45 to 68.50, but your major is still 68.65. 68.65, and then above that, you're looking at 68.80. Okay? Right in the middle of this, so if we do break down and we can't hold those, S&P can't hold 68.20, I will be focused on 6,800 for a potential pin. If we do rally, I doubt we can get to 6,900. So it's going to be closer. I'll watch the 68.50 area, which is the minor resistance going into the open. So that's what we have going in. Again, if we look at the daily chart, there's your major resistance is up at the 68.65, poking above it yesterday, but then we're still getting selling pressure. Still getting selling pressure. Keep that in mind. And we're still focused on the March chart for a little bit longer. The NASDAQ, here's the key level. On a closing basis, remember it is, if I could see it, we came right down to that 62.5. 24,892.25. 24,892.25 is a key level to watch. That tips the probabilities. But today, pretty much the exact same levels as yesterday. 29,395 area to 29,400. That's key resistance, key support, 25,200. If we break above 25,400, the next key area I'll be watching is closer to 25,500, 25,480 to 25,500. If we break below 25,200, it's into a clear path move, and you actually have only some minor support about 25,075 to 25,100, and then your major support isn't down to 25K. But these, keep an eye on these 25,400 and 25,200 in through today, unless they break above or below those levels. I'm watching, really focused on those. And I'm not going to be doing much today, so I'm mainly giving these out for other people. Dow, pretty much you're looking at same virtual levels nearly as yesterday. 48,170, 48,150 to 48,170 is key support. 48,370 is resistance. We break above there, then we're looking at closer to 48,550. The Russell key levels going into the open, 25.35. Start turning that into support. Major key resistance is 25.50. Very key support is 25.05 to 25.10. It turned into a support area down there. Remember, all support is not an exact science. It's an area that I start watching for either support resistance or reversal patterns. VIX continuing to drop a bit, but not much. Still holding above this 16 area. If we start getting below 16, not necessarily for today, but then I'll watch for more potential bounce. We start accelerating back above 1650. I'll watch for some more selling pressure. DAX rebounded. Remember, we still have the probabilities for the higher price. We've only ticked off the 75% harmonic, but we do have, this is a roll. We rolled finally in the DAX to March. Now, on the March contract, we do not. However, on the continuous contract, there is a potential double. So I'm paying attention to the low. This 23,684 on the prior December contract, and on the March contract, I'm paying attention. Sorry, clicked on the wrong thing. I'm like, what? That doesn't look right. On the March contract, I'm paying very close attention to this 24,040. Okay, if it rallies up a little more, it's only bounced off the 62.5. You need it to get to 24,500 to put this in the potential double top territory. So just keep that one in mind if you're trading the DAX. The yields confirming, just barely confirming the double, but no trigger. No trigger. 30 years, return to the rotation zone, possible percent B buy if it can get back above 4.828. Going through things quickly today, sorry about that. Crude, again, retesting the rotation zone. Has not come down to double bottom territory yet. If we do break above 57, not necessarily for today, but for next week, then I'm watching for a quick little thing to 58. Otherwise, I'm watching for a potential double bottom. Gold making a new high yesterday and then backing off. There's still caught in this tug of war. There is no key topping pattern just yet. But gold's really struggling up at these levels. The trend is still up, though, so I would not be short in gold. Remember, you could try to get a short on and get away with it, and that's not good behavior. Trade with the trend until you have at least a counter trend pattern, and then manage it closely if you want to trade counter trend. Silver still 68 is the key target. We're going to skip some of these other. Dollar is still holding up to bounce back, spiking in the rotation zone, little pulling back there. So if we do roll over, remember, first and second targets on the double top are hit, but the double bottom, massive double bottom, is not invalidated. So I'm going to be still watching for any kind of pullback now, and then the next move up. It's chipping away at the rotation zone unless we do take out Tuesday's low. Euro, same difference, into the rotation zone after hitting the first and second targets on the double bottom. Going to be watching for a more significant topping pattern potentially in the euro. Nothing yet, though. Bitcoin is basing in a little lower range. The key support is 84,675, 680 area. Key resistance is 89,260 to 300. So I'm keeping an eye on there. So what else do we have? The spiders. Again, key resistance is a 680.75, same as yesterday. Very key support now is 674.75. Let me mark that off. This is your very key support area. You have the sort of the breakaway gap here, and it's been tested twice with key lows, making this a significant level. So those are the two key areas to watch for in the S&P, or I mean the spiders. The Qs coming up just shy, bumping down this level just a hair. It's a little stronger at 613. And you actually also have a very key level now right around 607. So those are the two things you're going to want to watch for in the Qs. Yes, OD Green, highest ever options expiration today. It's huge. It's huge. All right. That is about it. That's all I have. I'm not going to go through. I mean, Oracle, because of the Saudi thing, you're getting the. Where is the. By there, you just a little bounce up. I'm still going to be watching for rollover plays in Oracle. Other than that, I don't have much to talk about today. We'll just revisit it next week. We will take a look at things next week. And remember, next week is the shortened trading week. So, certainly, I see your comment. Thanks for sharing that. I just don't have time to go into that right now. Everybody have a wonderful, wonderful, safe trading day for triple witching. And don't do anything silly, especially a Friday in December, right before the holidays, with triple witching with the biggest OPEX ever. Yeah, but there's a lot of stuff going on today because you don't just have you have massive OPEX that it's still a lot of it's still on. Whether it's going to expire, and there can be some with this big an OPEX, you can still get pin moves in there. You're welcome, Jake. So don't just go. That's why I do not these. This is one of the four least favorite I talk about every time trading days of the year. Probably December is my least favorite. So you're welcome, Mark. Thank you, Sterling. And I will talk to everyone on Monday. Have a wonderful, wonderful holiday weekend. I mean, we still got Hanukkah going on, Christmas next week. Celebrate with family and friends and have an enjoyable time and be at peace. Thank you, Yogi. And I will talk to everybody next week. Bye for now.